In this video, I will cover my Elliott Wave scenarios on OM, and by the end of this video, you should have a very clear idea of what we are looking for and also understand why this move to the downside was absolutely expected and is no surprise at all. So let's start on the weekly. This is the low, and we can count a very easily identifiable 5-wave impulsive move to the upside. Now let me explain why this is such a clear structure. We start on the weekly with a bit of a grind. These are your 1-2s. You can confirm that on the daily. Very quick move towards the upside, which is always your wave 3. That's what you want to see in a wave 3. Wave 3 tends to be the steepest structure in an impulse, which over here is definitely the case. Then you get a sideways range afterwards. That is your wave 4. And after a wave 4, you look for one more high to the upside, which is going to be your wave 5. And that's when you slowly start to get into selling territory. Now, wave 5 internally should also have an impulsive structure. So 1, 2, 3, 4, 5. It's perfection. It's super clear as well. Your wave 3 is a beautiful, very quick, fast move. Afterwards, a very nice sideways range. That is your internal wave 4. The moment you break this range here, it's the get out area, right? This area above the range, that is like selling area, because this is your wave 5, 1, 2, 3, 4, 5, of the bigger wave 5, 1, 2, 3, 4, 5. So you are now looking at ending a trend on a weekly time frame. You're in wave 5 on the weekly time frame, right? So this is a get out area. Now, after 5 waves, you always expect a retracement. You don't know if the retracement is going to be very fast or if it's going to be a slower structure. But at least you should know that a retracement is around the corner and you are out on a weekly time frame or daily time frame, because you expect a retracement down with a minimum target being the 0.382 at 0.83. Most common target is the 0.5 to 0.786, all the fibs taken from the low to the high over here, and the 0.5 at 0.397, 786 at 0.066. Now you can see that this impulse to the upside on my chart is counted as a wave A or 1, and for the bulls, we want to count a 3-wave corrective structure to the downside in a wave B or a wave 2, right? A 3-wave move, and then we look for continuation to take out the high. We are currently at a little bit of support as well. On a monthly time frame, we are at the monthly gap. So we move towards the downside, and you can see here we have one red candle, right? So we move to the upside, green, green, green on my chart, of course, gray. And then eventually we get one red candle here. This is important support. That is a monthly gap just below the red candle over here, which is where we currently find support. Now, just below this area, we have this range, which is important support. It has some structure, right? A range, previous ranges are always important, which is an area between 0.30 and let's say 0.20 where the weekly is. And then below the weekly, we have the value area high, which is a value area high taken from the whole chart. It's a volume profile that you can take from the start to where price is now. And then the value area high sits at 0.1449. Now, if you then jump to the daily time frame, then as you know, we are looking for preferably a 3-wave structure to the downside in a wave B or in a wave 2, so that we can then look for signs of strength and price to move towards the upside to take out the all-time high. So on a daily time frame, we at the moment want to keep an eye on, is this going to be an impulse or is this going to be an ABC? And I will explain to you the difference. I have my folders prepared here. Now, in both an ABC and an impulse, the beginning is absolutely the same. This move to the downside has to be a 5-wave structure. This range here has to be a corrective structure. Now, before I continue, let me go to a 4-hour time frame and explain to you why, in general, it was a good idea anyway, even locally, to start looking for price to take out the low. Again, do you know it's going to be this quick? No, you don't know, but you should be aware for potential downside. So even if on a weekly time frame you had no clue what's going on, you didn't realize that, hey, we're in a wave 5, over wave 5, this is get out area. Even locally, from a day trading, scalping perspective, probabilities were higher to take out this low and this low. Let me explain. Now this move down can be counted as a leading diagonal to the downside, a 5-wave structure, 1, 2, 3, 4, 5, right? But even if you're not able to identify this and you only know the basics of Elliott waves, being you know how to identify a 3 or 5-wave corrective structure, this move up is clearly a 3. The moment you get a 3-wave move up, you're always going to look for price to take out the low initially as the highest probability, right? So we get a 3-wave bounce to the upside, price moves down, takes out this low as well for good measure. This is now a confirmed 3-wave structure. The moment price takes out the low here, you're always going to look for price to take out this low as the highest probability scenario. Whatever happens after, the probabilities are highest to take out this low initially, right? Now it takes a little bit of time, but we come down. We take out the low. We swing the low, grab the liquidity, and we move up. But guess what? Here on a 4-hour time frame, again, a very 3-wavy structure to the upside. The moment price comes back down over here, right, takes out these lows, you know we're probably going to take out this low. Even a little bit earlier, right? So before this big candle to the downside, what you can do is take a Fibonacci, toggle on the 886, which is an important fib. The moment the 886 is touched, okay, the probabilities are very low. This is impulsive because you can't count a 1, 2, 1, 2 anymore because the 886 is very rare for a wave 2, right? We cannot count this as a nice 5-wave impulsive structure because price went down, okay? And for diagonals, it is too early. So the moment you touch this 886, probabilities are higher. This is a 3-wave, probabilities higher to take out the low. Do we then know that the next 4-hour candle is this? No, but we do know that we want to be on the short side, right? And then because we have the probabilities, because we know, hey, the probabilities are higher to take out the low, we just take it as it comes, right? You don't always know what price is going to do on any asset, right? You know probability is highest to take the low. And if price is then showing you this with the increased volatility, you not selling your bag once we take the low, you're like, well, wait a minute, this might actually go very far. And this is trade management because you are in position based on Elliott wave probabilities. You're in position and now price moves to the downside and you just manage your trade accordingly, right? Is it a fast move? Is it a slow move? Is it very impulsive? Is it very slow? Is it a swing failure? And does it go back up, right? You manage your trade from that moment. But the moment you see this, you're like, ooh, very nice, right? And we move to the downside. So that's with regards to the local stuff. Let's go back to the daily. And this is your impulse. Now, an impulse to the downside is arguably a bit more bearish because you would look for a 1, 2, 3, 4, and a 5, 3-wave correction. That is then your wave B or wave 2. But in a bullish scenario, that's your B. And then you look for another 1, 2, 3, 4, 5 in C. After C, you look for price to move up. If this is a wave 2, wave 1, wave 2, and then wave 3, that's your alternative, right? Okay, but that's going to take many, many, many weeks. So let's just focus on the local stuff so that you actually know what to look out for. So we have our 1, we have our 2, we have our move down, our sideways range. Very nice, right? We have a very clear impulsive structure to the upside. It's big. It's on a high amount of volume as well, which is typical for a wave 3 as well as a wave C, right? That one is coming up next in my video. So currently, we could potentially label the low as a wave 3. Maybe prices on the lower time frame, bit of range, take the low once again, right? This tends to happen in a bear market, for example, on Bitcoin. I'm not saying, by the way, this is bear and bull market. I don't care about terminology and definitions. We trade the chart. It is as it is, right? But just like on Bitcoin, right, if you have a big wick, right, it's no problem to see something like this as well. So yeah, low of 3, maybe a bit lower, doesn't matter. Eventually after 3, you look for 4, and this is what matters. Your wave 4 is most commonly similar in size, if not longer in time, than your wave 2. And we're talking about time here, right? So you want a wave 4 that is at least a couple of daily candles, same as your wave 2, okay? Now at the moment, what you can see is the most common target area for a wave 4. the 0.236 to the 0.5 taken from the highest point of 2, which I took over there, to the low. Okay? 0.74, 1.14, the 0.382, always a nice target for a waveform, and the 0.5 at 1.62. Important, the 0.618 is an invalidation for your wave 4, right? The moment you hit the 618, probabilities are so incredibly low that you are looking at a wave 4 and another 5 down, that probabilities increase a lot for this to be an ABC, 3-wave structure. In other words, we are going to look for the highs. And just to show you 2 examples on Bitcoin, right? I got you this one here. This was the 3rd of January in 2024. Very, very similar. We had a diagonal on the lower time frame, a range, and a very quick move down. Now, I happen to be live on this day, so you can even go back in time to my live stream and the video that I made before, because I explained in that video, right? The video I made probably in the morning of Wednesday, right? Wednesday, the 3rd of January. I said the probabilities are higher to take out this low. Did I know that this was coming? Absolutely not, right? But I knew probabilities were higher to take out the low, right? And then we were live on YouTube during this move down, which was one of the craziest live streams I've ever done. Now here, what you can see is if we take a fib from this high, and I explained everything in the live stream as well. So if you want to learn more about this methodology, I suppose, just check the live stream. But this is the 886, or sorry, I need the 0.618, right? So we put the 0.618 on the chart because we know that the 0.618, right, is an invalidation for a wave 4. What we can see is that we had a high amount of volume, quick move towards the downside, big wick here as well, right? And price move towards the upside. We're on a 4-hour time frame, so it's taking time, right? But eventually, I think here we just missed out on hitting it. Eventually, we touched the 0.618, right? Very, very clearly. Meaning, probabilities automatically increase. This is an A, B, C. Probabilities therefore immediately increase for price to take out this high because this has higher probabilities to be corrective. Yes, we can have a bigger corrective structure. Oh, that's fine. Probability is higher to take out the high nonetheless. 3-wave down, we move up, sideways range, blah, 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 boom, right? Now I'll show you another example, right, for the sake of education. So we're mixing some education here together with providing an update on OM. But here's a similar one, right? This was on the 5th of December, right, end of last year. Bit of a move down. You see one gray candle on my chart, and then a quick move down, right, with a big wick as well, high amount of volume. We do the same thing. We take a fib from the high to the low, and we wait, right? It makes zero sense to be part of such a move. It's very wicky. It's very difficult to have solid risk management at such moments if you don't have an incredibly clear plan to snipe highs or lows, right? Usually it's better to be very patient. Price moves up, blah, 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 and eventually ups, touches the 0.618 here. Cool. Probability is now higher. This is an ABC down. Probability is higher to take out the high. Takes a little bit of time, right? Nothing goes into straight lines. Takes a bit of time, blah, 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 takes out the high, and there you go. Right? So that with regards to an example of what to look for on OM. Now this move is very quick, right? It doesn't matter if we still take out this low. What matters is that once price settles and we start to get a couple of sideways days, right? That's what we're looking for. Give it a little bit of time. You got to keep an eye on the 618. And very likely when you touch the 618, it's not just going to do this, right? It's like a bit of a range, and then maybe something like that. We'll be updating again, right? We'll be updating again. Let me actually just put an alarm on it so that I'm sure that if it does happen, we are here to cover it. So this is your common target area. If price is making a new low over here without going sideways for a couple of days, right? Similar to your wave 2 at least, preferably, no. Then we just drag these fibs from that highest point here to the new local low till we do get a bigger sideways range of a couple of days. Now you can also see the 2 vertical lines on my chart. These are fib times, and the fib times are taken from the start of 2 to the end of your wave 2. I just took this whole range for good measure. So just for an estimation, if that's your low, preferably your wave 4 is going to take till, let's say, the middle of May at least, right? Minimum, let's say the 10th of May, 12th of May. After the 1-to-1 would be extra nice as well. Maximum target would even be like later this year in August, right? So wave 4 can be very long, right? Preferably though doesn't reach all the way to the 4, but at least you get a bit of a feeling for what to look for, okay? Now this is then your ABC, okay? So this is your bullish scenario. You have your A, you have your B, you have your C. This is similar to Bitcoin, okay? Doesn't matter if you still take out this low. We don't care about that, right? Big move already happened. It's now time to basically just wait for a range to form. It's very good advice in very impulsive structures. Wait for a range to form. The range will give you all the clarity you need. No stress, no FOMO, no all of that emotional stuff. Just the chart, right? So we have our A, we have our B, we have our wave C to the downside. Take the low, yes, no, who cares? I'm not going to count this structure to the downside here in detail, right? But at least we can see that the move has started to slow down a little bit. Quick move down, and we start to at least move a little bit sideways. Now, after your wave C, give it time, you do want price to touch that 0.618 at 2.297. Right? So that's an important area on the chart. Now, with regards to resistance to the upside, right, I do have a little bit of resistance to the upside, which I got to go to a 5-minute time frame even. And those are the order blocks. So whenever you have such a quick move to the downside on a 1 hour, 4 hour daily, it looks incredibly steep. But go to the lower time frames and try to identify order blocks, as we like to call them. It's like the breaks inside the drop, right? So we have a quick move down and we have a stop over here, right? For 5 minutes, we actually move towards the upside in the opposite direction. Look for the green candle in the downtrend. One there, couple of ones over here, and then we create the low. These are going to be your initial resistance areas. Clear resistance here, by the way, that's quite nice. Your second area, right, is 2.3 to 2.59, okay? Now, I'm not going to count everything on the lower time frame because, again, right, you got to wait for price to settle a little bit, give it a bit of time as well. There's no need to go into such low time frames. At least we know the areas of resistance to the upside, areas of support to the downside. For a wave 4, right, you want to have sideways price action, while for an ABC, you want to see the 0.618 touched, okay? So this is what we are looking for. So if we then look at the probabilities on OM, I have to zoom out. There we go. So currently, the probabilities are higher that this structure to the downside, again, it was as expected, right? If you know Elliott Wave Theory, and if you don't, I have at the end of in the end screen, a great full beginner's guide on my YouTube. It was coming, right? Wave 5 of a bigger wave 5. No? Currently, probabilities are higher here that we are correcting an impulse to the upside. 1, 2, 3, 4, 5 wave structure, very clear. Probabilities are higher that we are correcting an impulse down. Either look for an ABC, possibly 5, 3, 5, which also means, by the way, that even if you do look for 1, 2, 3, 4, 5, after 5 waves, guess what? You're going to be looking for a nice big bounce back towards the upside, a retracement, right? Which is then going to be your wave B, and then another C down. But this is absolutely tradable, right? You're not immediately expecting all-time highs, but after a 1, 2, 3, 4, 5 wave structure, you do look for a corrective move to the upside, touch some resistances, and then turn around, okay? But first we let price settle a little bit. Now be aware of the 0.618 Fibonacci to invalidate a wave of 4, right? Here it is, 2.297. Remember that wave 4 tends to be similar or bigger than a wave 2 in time, something to keep an eye on with the Fibonacci times as well, right? So currently it's around the 12th of May. If that's your low, if you create another low, you just got to take it from start of 2, end of 2 to that new low, okay? Currently on support, which is the monthly gap, not the daily gap, the monthly gap, we still have a little bit of support to the downside as well. We have this range, we have a weekly, we have the value area high. No drama, no stress, patience with such moves. What has happened, happened, right? Unrelated to if you had a very big bag in OM or if you made a lot of profit, manage it well. If you are still in certain positions, don't FOMO, don't YOLO, take a few days off, let price settle, come back to the chart, come up with a plan, right? Or ask stuff in the Discord group, because in Discord there's a big community sharing charts about all sorts of alts, and I am active there as well. Wait for a range to form, which is one of the best advices that I can give in very volatile environments, because a range will always give you the most clarity. I hope that this video was helpful or valuable to you. Please check out the CVD indicator video, the best indicator out there, but more importantly, the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye-bye.